In today's video, I'm going to be going over SPY, or the S&P 500. I'll give you my outlook on where I think SPY is headed next, where we're actually going to peak, and then what happens after we peak. I'll also give you some insight into what I'm personally doing right now, based on my thoughts of where SPY is headed. As you may know, SPY is one of the major indexes in the market, and so understanding how it moves will help you understand how the rest of the market is going to move as well. So if that's something you're interested in and you want to know where SPY is headed next, keep on watching and we'll get there shortly together. So let's go ahead and dive right in. Now the last time I did a video on SPY, it was April 10th, and I actually have the video opened right here. Now at that time, I told you that I was counting a 1, 2, 3, 4, and putting in the fifth wave for Elliott Wave Theory. Now if you don't understand what Elliott Wave Theory is, I do have an extremely long playlist going over it, but I'll also give you a brief introduction in just a couple of minutes here. Now on April 10th, the price was around $410. We are basically right around here where I'm hovering my mouse right now, and I told you that I thought SPY was going to be pretty bullish in the short term, put a peak in the mid 420 range up through here for this third wave here in blue, come down for one more kickback for the fourth wave, and then go up for a final push as the fifth wave around $437 as my target. So let's go ahead and take a look at where SPY is now. So this is pretty much the exact same chart I had before. I haven't really moved too much so far. I might have adjusted this parallel channel just a little bit, but this 1, 2, 3, 4 that I had on my previous video is still in the exact same spot, and I still do believe it's correct. I believe we're in this fifth wave right here. Now, as I said, this is Elliott Wave Theory, and if you don't know what it is, I don't want to lose you too soon into this video, so let me give you a brief introduction. It's going to be short, and if you want to learn more, like I said, I have a 2.5-hour playlist on it to teach you all of the rules and guidelines. But real quickly, in Elliott Wave Theory, it basically states that the market trends in waves of fives. It looks something like this, and I'll put the wave on it just for now so you can imagine what the price action might actually look like. Candles leading us up like this, a pullback, another lead up like this, another pullback, etc. for the fifth wave. Now once we get this 5-wave move, what happens after it is we form an ABC. It goes in the opposite direction and it retraces an amount of this 5-wave move, and it looks something like this. Now of course it's a bit more complicated than this, but the only other thing you really need to understand here is that once you have this 8-wave move, this 5-wave structure up and this 3-wave structure down, all it does is repeat itself over and over and form these waves within waves. So for example, this 8-wave move is just another 1, 2, and then you form that into another 3, 4, 5 structure. So inside of this big 1 and this big 2, we have this 1, 2, 3, 4, 5, 6, 7, 8 wave structure under it. So there's waves within waves, and that continues. Even the smaller one has 5 waves inside of it, and even this bigger 5-wave structure will be corrected by an ABC, and that'll form yet another 1, 2 on a larger degree. So with that in mind, taking a look back at what we already have the 1, 2, 3, and 4. We've validated all 4 of these waves so far by counting out 5 waves in our 1 wave, and just to quickly recap, I see it as 1, 2, 3, 4, 5. So like I said, the 1 wave has to have 5 waves inside of it. It's pretty clear even when zoomed out here. The 3 wave also has to have 5 waves inside of it. This one's a little bit more tricky, but I believe it's something like 1, 2, 3, 4, 5 for this one right here. Then we get a pullback for the 4, and now I think we're working in that same 5-wave structure to finish our 4-wave right now. Some of the other things we did in the past to validate this 1, 2, 3, 4, we're using tools such as the Fibonacci Retracement, as well as the trend-based Fib extension tool right here. These are 2 very common tools you use in Elliott Wave Theory, and you'll see how we use them to count out 5 waves into our current yellow 5-wave structure right here. Because once this forms 5 waves upwards, that's going to be the peak and we're going to have a pullback. I'll get more into that later on. For now, let's go ahead and dive into this yellow 5-wave structure. Before we take a deep look, just one quick reminder, if you do like this content and want to see more similar content, do me a huge favor and click that like and subscribe buttons below. This supports my channel and helps me out a ton, and I really appreciate it. So diving into this 5-wave structure right here. Like I said, we want to count out 5 waves inside of this yellow 5-wave. Now, I think the 1, 2 of this structure sticks out very clear to me when I first look at this. From the bottom right here, we get a nice strong push upwards here from about $371 up to about $398, and then we have a pullback down to $384. After that, we get a pretty strong move upwards, and as of now, it's pretty unclear whether the third wave is here or maybe it's at this peak higher up here, because our fourth wave can actually have a wave that comes above the third wave peak, so our third might end up being there, but I'll draw it here for now. And then I'll put the fourth wave as our pullback just after that, and I'll say that we're working on this blue 5 wave right here. So inside of the yellow 5 wave structure, we have a blue 5 wave structure, 1, 2, 3, 4, and I think we're working on the 5th wave at first instinct here. So let's go ahead and try and validate some of this and see if we're correct, see if it makes sense, and see if it follows all the rules and guidelines. The first thing I'm going to do is use a Fibonacci Retracement tool. I'm going to click at the bottom and the top of my 1 wave right here, and I'm going to pull it sideways. Now, real quick, if you've never used the Fibonacci Retracement tool, once again, I do have a guide going over this tool, but I'm going to give you a brief introduction. Basically, what this tool is doing is measuring a retracement percentage. So we have this move that starts down here and goes up here that we've labeled our 1 wave, and then afterwards, price pulls back. You can see that we come pretty much straight down to this red line right here that I have labeled as 0.5. What this 0.5 means is that it's a 50% retracement. In other words, the move from here all the way up to here pulls back 50% of its depth to come to this red line. This is the halfway point between our top and our bottom here. Now in Elliott Wave Theory, the most common spot for a 2 wave to fall relative to the retracement of pulling from the bottom to the top of the 1 wave is between this red line and this gold and yellow line right here. This gold and yellow line is called the golden zone. So between the 50% retracement and the 65% retracement is where we expect a 2 wave to fall. And you can see we're perfectly inside of it right here. We actually had a wick that fell just below this 0.5 right here, straight into our box, so this is absolutely perfect. The other thing you can note with this 2 wave is that, like I told you before, there needs to be an ABC inside of the 2 wave, and this one is about as clear as it gets. Our first push down from the top from here down to here is our A, we get a small retracement up there for our B wave, and then finally one more push down for our C wave to look something like that. So A, B, C forms our 2 wave right here. I'm going to delete that ABC on my chart because I think it clutters it a bit too much. We've now validated this 1, 2. Let's move on and validate the 3rd wave. Now to validate the 3rd wave in Elliott Wave Theory, we need to use the trend-based fib extension tool. So we're going to click on this tool and we're going to click at the bottom and the top of our 1 wave. What that's going to do is actually capture the length of our 1 wave into our mouse right here. So now wherever we click this next, we're measuring it relative to the length we just captured. I'm going to click at the bottom of our 2 wave right here, and I'm going to pull it sideways just so I can see it on the rest of the chart. Now this pink line right here, you can see it's labeled 1 or 100%. What that would basically mean is that if we took this length that we originally measured from the bottom to the top of our 1, and then if we simply copy pasted it or moved this arrow, it would put it right up to that pink line from our 3rd click right here. So you can see that's exactly what it does. Basically what it means is that this length from here to here is 100% the length from here to here. They're exactly equal. Now in Elliott Wave Theory, the most common spot for a 3rd wave to come is between the 1.618 and the 1.75, which is this box up here, or 161.8 to 175%, the length of the 1 wave. Of course, our 3rd wave doesn't quite make it up to that, but one of our other common zones for it to fall is between this 1.272 and this 1.414, into this box right into here. Now the peak, as I have it labeled right now, comes a little bit above that, but if I really dive in and look at this peak, not only does this box make me want to move this 3 wave over to here more, but also look at the end of our 3rd wave right here. If our 3rd wave was up here instead, remember that the 3rd wave needs to have a 5 wave structure inside of it. Now I'm just going to randomly click the 1, 2, 3, 4 right now, just to show you a point. The very end of where a 3rd wave would be right here needs to be a 5 wave structure, because it's the 5 wave inside of the 3rd wave. The 1, 2, 3, 4, 5 that makes up our 3rd wave right here, the 5 of this right here needs to be a 5 wave structure. Waves within waves within waves. However, if you look at this price action right here, this looks very much like 3 waves to me. I see an A, B, C right here. And what I would need to see is a 1, 2, 3, 4, 5 to make up this 5th wave right here, which would finish our 3rd wave. So because this looks like an ABC structure, and because our Fibonacci is leading us towards this being our 3rd wave, I'm going to move our 3rd wave over to this peak instead of the one up here. So overall, this 3rd wave isn't in that target zone of the 1.618 to 1.75 bracket that we would prefer it to be in, but it is in one of the other common spots for a 3rd wave to fall, as I said, between the 1.272 and 1.414. So this is totally okay. I'm going to leave this for now. Next up, back on the Fibonacci retracement. We're going to use our Fibonacci retracement tool from the bottom of our 2 here to the top of our 3rd wave, not the top of the peak up here, the top of our 3rd wave, and pull this one sideways as well. A 4th wave in Elliott Wave Theory is most likely to come between this 0.382 and this 0.5 right into here. And you can see our 4th wave falls perfectly inside of that zone. So this is definitely valid for a 4th wave. The other thing we need in a 4th wave is an ABC structure. And as I mentioned earlier, I believe the ABC looks just like this, where we have this first leg down as our A, this B that is allowed to come above our 3rd wave here, and I believe it does. It's called an expanded flat, and then a C wave down to finish that. I'll delete this ABC. I think our 4 wave is definitely valid into here. Okay, so moving forward with this 1, 2, 3, 4, the next thing we need to do is validate the final price action. We need 5 waves to end our 5th wave in blue here, which also ends our 5th wave in yellow, and would start the bearish movement downwards. Now, just a couple weeks ago, it definitely looked like this was a perfect 1, 2 forming right here, and we were going to get a nice 3, 4, 5 impulse to finish this off. That would be our 5-wave structure that we would need to finish this 5 and the yellow 5 as well. Now, unfortunately, this price action has gotten super choppy in here, and it makes it pretty hard to figure out where this 3rd wave actually might be. On first instinct, you'd want to label the 3rd wave up into here with a 4th wave down here, and we're working on the final wave right now. However, this is actually a problem. You can see that the 4th wave and the 1 wave overlap in price. If I just draw a pink line at the top of my 1 wave right here, you can see the 4 definitely comes below that. Now, this is sometimes okay in Elliott Wave Theory. It's called a diagonal, but I'll show you why it's not okay in this situation. In a diagonal, where the 4th wave and the 1 wave overlap, what you need to do is connect the 1 and the 3 with trend lines, just like this. And then you need to connect the 2 and the 4 in the same way. From here, there are 2 different types of diagonals. We can either have a contracting diagonal, where the trend lines are coming towards each other, or an expanding diagonal, where the trend lines are moving away from each other. You can clearly see that my 2 trend lines are moving towards each other. If I were to draw them onwards forever, they would definitely cross, and the distance between here and here is much greater than the distance up here. So they're moving towards each other. What that means is that the 1 wave needs to be the longest wave, the 3rd wave needs to be the 2nd longest wave, and the 5 wave needs to be the shortest wave. So if we use our trend-based fib extension tool once again and measure the length of our 1 right here, and then we put it at the bottom of our 2 and we'll pull sideways, you can see the 3 comes above this pink 1.0. What that means is that the 3rd wave is longer than the 1 wave, and this is invalid in a diagonal. So we cannot label this as a 1, 2, 3, 4 like this. We need to think of something else here. I'm going to delete this small 5 wave for now, and let's try to rethink it. The next idea here is that our 3rd wave isn't actually fully in. We have this 1, 2, we're working on some sort of 3rd wave right now that might finish higher up into here. Then we get a 4th wave that doesn't overlap the 1, and finally one more push upwards to finish. So changing the degree in color so it can be separated more easily, it would be 1, 2, 3, 4, 5 to finish our blue 5 to finish our yellow 5. Now, technically speaking, there's nothing wrong with this count. It's definitely possible this is what's happening, but this price action right here is not very resemblance of a 3rd wave. 3rd waves tend to be very impulsive. You can see that this 3rd wave right here in blue moved from $384 all the way up to $420, and it went pretty quickly upwards right here. This 3rd wave did have a strong move up at first, but now it's just been sideways for a very long time in here. So as a result, I lean against this being the price action of a third wave, and I would look for even one more possibility of what might actually be happening. Now, it's worth noting that if we get one more push upwards like this, and then we do have this pullback like this for a pink fourth wave that doesn't overlap the one, or if it does, we need to have an expanding diagonal, as I mentioned earlier. But let's just assume we get this push up, a push downwards, and then one more push upwards. At that point, I would believe that we have our final end to the count here. Although this wouldn't be the best third wave price action, if we get another move up and this pullback and one more move up, I will believe that this is the count that's in play, and I will move forward with it. But for now, I'm going to show you what I think is a slightly better probability. I'm removing this pink 5-wave structure, and what I think is actually happening is our fourth wave isn't fully in right now. I'm going to move that to the side to show you what I mean. I think that this ABC that we pointed out earlier for the fourth wave is valid. I do believe that's an ABC that's actually happening. So it looks something like this. Now, an ABC doesn't have to be the fourth wave. It can actually be the start of a WXY, which is a combination in Elliott Wave Theory. Essentially, a combination has this as the W wave, the ABC to make the W wave, and then we'd have another ABC to make an X wave, and then we'd have another ABC downwards to make the Y wave. It looks something like this. And we would need to find an ABC inside of this X wave, and then an ABC downwards for the Y wave, something like this. Let me take a quick step back though and delete those off my chart for now, and take the wave back off. Now I think the AB in this X wave is actually pretty clear so far. We have an A here and a B here. Now we need to finish this C wave of the X wave right into here. Now, once again, this C wave has to have 5 waves inside of it, and trying to pull out 5 waves right now is a bit tricky. There's quite a few different options, but one of them that's possible is that this first little push into here is the 1-2. We have our 3 wave up into here with yet another expanded flat, A, B, C, 4th wave into here, and now we could be working on the 1, 2, 3, 4, 5th wave of our C wave into here. Now, let me fix up the degrees on this so that they make sense. And there we go. We have the ABC into a W, an ABC into an X here, which I think is in a 1, 2, 3, 4, finishing the 5. And then once this X finishes, we would need to do this to finish the Y wave into here. So once this happens, if we do end up peaking into here and then we put in a new low, specifically if we break below this pink line right here, this will help validate this count. We'll get this ABC down into the Y here to finish our 4th wave as we had originally thought it might be there. And then we'll get one more final push up in the market to the 5th wave up here, which will be a 5-wave move. So the very last thing I want to go over, what actually happens after this 5-wave move is in. Now, of course, this still has quite a bit of time to play out. We're still going to get that one last push up into here, and then this ABC down, and a final impulse upwards for our 5th wave, which I'm still projecting to be around $436. But just for the sake of looking at what happens afterwards. Well, as I've been telling you this whole time, there are waves within waves in Elliott Wave Theory. Once this yellow 1, 2, 3, 4, 5 is finished, all that means is that it's another 1, 2 forming on a larger degree for SPY to go ahead and put in crazy all-time highs after that. And let me turn up this degree so that it also makes sense. I will change the color here as well to distinguish it. And there you go. I think this whole price action is a purple 1 wave right here, which would mean that all we need to do is use a Fibonacci retracement. And for now, I'll pull it to about $436 as I'm projecting the top to be somewhere around there. And this is the most likely zone for a 2-wave to fall after that. As I've said multiple times, between the 50 and the golden zone right into here. So from about $294 up to about $325 will be my price prediction on SPY if we peak at $426. So overall, one more quick summary diving into our current price action. I believe we're finishing the 5th wave of the C wave of the X wave into here, which is just the X wave of our 4th wave. We'll get one more push down for the Y wave into here. Perhaps below the W wave would be pretty common into here, and if not, a 1-to-1 ratio. So if we measure the length of the W up to a projected spot for the X into here somewhere, we could expect the Y to either come down to about $405 or maybe back down to about $400 into here between this 1.272 and this 1.414. so WXY, to finish our fourth wave into here. And then finally, the fifth wave pushed upwards to $436. And once that happens, I believe a bear market is going to start, and it's going to be for an extended period of time down to $330 or so on SPY, and maybe even lower than that. Now, before you close this video, real quick, I just wanted to let you know that I do have a free Discord server. I'll put the link to it in the description below. Feel free to come join that and trade with me and others every single day. We're constantly talking and chatting and floating ideas by each other, and if you have any questions you want to ask me, that is definitely the best place to go and the quickest place I'll be able to answer your questions. And lastly, if you enjoyed this video, please do me a huge favor. Click the like and subscribe buttons below. Everything I post on my channel will help you become a better day trader, so if you're interested in that, it'll do you no harm in clicking those buttons, and it'll do me a huge favor. I really appreciate all of your support and for watching the video to this point. Thank you so much for watching, and as always, good luck trading.